Donald Trump wants the crypto vote. Mining difficulty plummets as inefficient Bitcoin miners become unprofitable, and Bitcoin surpasses 1 billion on chain transactions. We'll discuss all this and more in today's video. A Twitter user by the name of @MacDeGods asked 2024 US presidential candidate Donald Trump about regulatory hostility driving crypto businesses off US shores and what he plans to do about it should he return to the Oval Office. Roll the clip.
Thank you for the statement. Yeah, with the goggles on.
A lot of the smartest people in crypto are moving their businesses out of the U.S. because they're scared of the U.S.'s regulations.
Because of the hostility.
Correct.
Yeah, crypto is moving out of the U.S. because of hostility toward crypto.
Correct. So what are you going to do to stop it?
Well, we'll stop it because I don't want that. I don't want that. I want that. If we're going to embrace it, we have to let them be here.
Yes, sir. Morgan.
With federal agencies currently demonstrating hostility towards Bitcoin and crypto, it is clear, whether you like it or not, that this has become a partisan issue. That's not necessarily a bad thing. Obviously, it would be ideal if there was universal support for Bitcoin, but that's unfortunately not the case. The fact that a former US president is positioning himself as pro-Bitcoin shows that Bitcoiners have become an unignorable voting bloc within the United States. This is game theory in action. Bitcoiners are forcing political actors to appeal to our demands. We possess enough capital and economic pull that it would be imprudent to drive us offshore, and one of the presidential frontrunners understands this. Trump obviously used the word crypto and not Bitcoin, which may irritate some Bitcoin maximalists, of which I myself am, but there's no need to get upset that a 77-year-old doesn't understand the difference between Bitcoin and crypto. It's also reasonable to expect that a politician would rather appeal to the broader group than to ostracize non-Bitcoin maximalists. I don't know about you, but I would rather crypto be thrown in the same bucket as Bitcoin than for there to be hostile legislation towards both. If Bitcoin maximalists are right about Bitcoin being far superior to crypto, then the market will figure that out for themselves without the state having to make a distinction. And this is already what's happening. There's only one digital asset that has billions of dollars worth of ETF inflows and the backing of Wall Street. Speaking of institutional backing, Susquehanna International Group, also known by the acronym SIG, disclosed in SEC filings that they hold a $1.8 billion position across a handful of Bitcoin ETFs. Their largest position is a $1 billion allocation to the Grayscale Bitcoin ETF. It's been said before, but it's worth repeating. The ease at which the ETF allows institutions to gain exposure to Bitcoin is truly game-changing. It's simply not possible for Bitcoin to reach the stratospheric levels we anticipate without institutional capital. 10 trillion, 50 trillion, or $100 trillion market cap, in real terms, we don't get there without the suits. The ETF allows for them to deploy with minimal friction. That being said, the ETF is not real Bitcoin, not your keys, not your coins. A Japanese company called Metaplanet, which is publicly traded on the Tokyo Stock Exchange, announced this week that they are adopting the corporate Bitcoin strategy. In their own words, Metaplanet describes the corporate Bitcoin strategy as leveraging all available tools in public capital markets to achieve accretive Bitcoin accumulation for the corporate balance sheet and align with Metaplanet's long-term vision of advancing Bitcoin's role in the global economy. In other words, Metaplanet is going to be the MicroStrategy of Japan. This is the first of many future MicroStrategy copycats. The playbook is simple, open source, and it's been proven to work. MicroStrategy stock is up roughly 1,000% since they incorporated the Bitcoin strategy nearly 4 years ago. To help implement this strategy, Metaplanet hired popular Bitcoin analyst and thought leader Dylan LeClaire. Dylan has been incredibly vocal about his admiration for MicroStrategy and their approach to Bitcoin. In the past, he's produced in-depth content breaking down just how clever the corporate Bitcoin strategy is, and he's described it as quote-unquote the biggest story in corporate finance. Metaplanet definitely hired the right man for the role, and it'll be fun to watch how things unfold for the company going forward. The race to secure a share of the 21 million Bitcoin is heating up. On Monday, a clip went viral in which a speaker at Ohio State University's commencement ceremony, a man named Chris Pan, gave praise to Bitcoin.
But I encourage you to keep an open mind right now.
No.
I see Bitcoin.
Prior to even mentioning Bitcoin, Chris presented startling statistics on how the debasement of the US dollar is disproportionately damaging younger generations, and he presented Bitcoin as the solution. However, the audience of college graduates did not see it the same way, responding with boos upon the utterance of the word Bitcoin. In case you thought we were no longer early to Bitcoin, I assure you we most definitely are. The Ohio State class of 2024 might not get it yet, but Bitcoin offers hope to Generation Z. In a world in which homes are becoming increasingly unaffordable for first time buyers, a university education is often accompanied with 6 figures of debt, and the average income is barely enough to pay the bills, Bitcoin offers an opt out. Bitcoin is a way for anyone, young or old, rich or poor, to store the fruits of their labor in an asset that cannot be debased or censored. Without Bitcoin, it would be impossible to save for the future and know with confidence that your wealth will retain purchasing power over time. This week, Bitcoin had its 1 billionth on chain transaction, a historic milestone. While store of value gets all the talk as it is its most prominent use case, it is still highly effective as a medium of exchange, at least for now, given the current number of users. Some scaling will need to be done in order to service billions of users, but in its current form, it works great. In fact, there's no other network that enables you to send billions of dollars worth of value across the world, have settlement occur in about 10 minutes, and it doesn't even need a bank, nation state, or any third party to facilitate that transaction. And at the current transaction fee rate, you can do this for less than $2. In total, across the 1 billion on-chain transactions, adjusting for changeback UTXOs, the Bitcoin network has processed roughly $43 trillion worth of transactions. And 3/4 of that 43 trillion has come since 2021. For reference, that's nearly on par with Visa, who processes roughly $10 to $11 trillion per year. The most exciting and most bullish development this week was the 6% drop in mining difficulty. Why did this take place? Well, miners with inefficient ASICs and or high electricity costs became unprofitable after the halving, and they are consequently unplugging their machines. Why does this matter? Well, for the surviving miners, this is of course bullish. 6% lower difficulty means that the miners on the network will earn roughly 6% more Bitcoin for the same amount of hash power. It's not a bad reward for surviving the halving. What's next? Next is that there will be less sell pressure on Bitcoin going forward. Think about it. Those miners that had to unplug their machines were the least profitable miners on the network. That means they were selling a majority of the Bitcoin that they mined in order to cover their operating expenses. Now that they're no longer mining, that's going to relieve sell pressure on Bitcoin. It may take a few months before the effect is felt in terms of a rising Bitcoin price, but make no mistake, weak miners unplugging is definitely not bearish. This is the Bitcoin network's natural immune system, a free market response to reward miners who allocate capital efficiently and punish those who do not. It's looking like the miner capitulation is not quite over, as the next difficulty adjustment is projected to be negative as well. Right now on the Blockware Marketplace, you can buy the latest generation, most efficient ASICs on the market and benefit from the drop in mining difficulty. Click the link below to get started. We've got S21s, S19 XPs, S19K Pros, and more. All of these machines on the marketplace are sold turnkey, which means as soon as your transaction receives 6 on-chain confirmations, the ASIC will belong to you and you'll begin earning mining rewards instantly.